All right, so couldn't tell if I was streaming or not yet. So here we go. Um, didn't have much of a didn't really have much action the whole day, even though it's 2 o'clock now. I didn't really get to see the market really this morning, except to glance at it on my phone, and it didn't really seem like it was doing much. It's kind of a boring day, which I'm totally fine with because I had a busy day myself. Um, wasn't really able to do much anyway. So if we were to measure the range of today's movement, it would be like there was no trade to take that could have completed. There was no completed trade. So I guess we could have taken the 425. I mean, I got to drop down to a smaller time frame because there's just so little action. There was room to take the 425, I suppose, this today. That would have worked out. Um, and oh no, I guess I did it complete. Yeah, I guess it would have completed just barely a full quarter from the 425 to the 175. I wasn't around to look at it though, but it would have worked. This is something that I missed, and of course you could make the argument for the 175 back up, which would not have finished, which would not have completed the quarter. But there was room up here, and you could have taken that from, I guess, playing this area right here, this 4 hour candle, nice big drop. It's not as good of a drop as if it were to have made a new low, like broken past this, which is kind of what I was looking for to re-engage because I didn't want to just stay in this range bound thing, but just as last week, you know, we're the playing the range from where was it? I can't recognize it as well on the 4 hour. Here. So this range from the fifth to the I guess the 10th, right? This is like a whole week's worth of trading just being inside of this range. There's like 3 or 4 wins that you could have just picked up between the 500 and the 750, right? No losses, just pure wins, just bouncing back and forth around this quarter. Um, and it looks like we're shaping up for something similar. Only it's not a clean quarter. It's like kind of shifted one phase up. So it's instead of from what would normally have been like the 250 to 500, it's kind of shifted. I guess technically one phase down. So it's the range from 425 to 175. So I got a win from that on this one on the beginning, 175 to 425 up here. I did not get either of these going back down. No, no, no. I think I got it from here to 425. Right, that was my win. Um, at this point, because the momentum looks like it is weak, this area is used up pretty much. Like this candle is one that I wanted potentially. I missed the short from here. I missed it again from here. I only picked up the counter trend win from up here, but these were 1, 2, 3, 4 wins that were available just from inside of this range, inside of this consolidation that's happening. I only got one win out of those four, but that's the part that I need to work on and stay aggressive and stay consistent and stay aggressive. Better than losing, but still, not anywhere near the area that I want to be. This area, it's like it's a little weaker now because, like I said, we've already been using up all the imbalanced orders here. Um, but the structure does indicate there's still more imbalance. It's just not as strong as before, and it's not making new lows, which is what has me kind of like hesitant. That's what made me hesitant to even that I didn't even take this because I'm like, okay, I don't really want this. It technically it did make a new low by like a point or two, technically. So um, technically, I should have been a little bit more meticulous about that, and it would have worked out. But I was kind of gun shy about it, and that's the lesson to learn. Just stay aggressive. But so if I'm following my own advice there, that is to take this um, because the moment like I all evidence does support that it could hold up again. The only thing that is going against this holding up is the fact that it would be literally the third test. So it'd be like this is the first test, it worked the second time. You're asking for it to work a third time. That's kind of aggressive. But I've seen that happen plenty of times. So if I'm just following that, right, and not thinking too much about it, take that. I think I had the order for it to take the 500 as well. But if this breaks, I want to see what happens at the 500, because technically this would be making a new high above two areas of resistance, and if you break a new area of resistance, so now you kind of hit the reset button. Now you have to reevaluate, right? So now is this an uptrend? Am I going to see a lower or a higher low, that's higher than this low, and then make another high? And is it a beginning of an uptrend? Like that's the kind of mindset to take on. There's already a higher low established right here, and so this is kind of risky. Not too comfortable with this, but I gotta put something on the board, um, to not get stale and rusty. So this is also the highest. I guess this part, for some reason, this part doesn't show. I guess they're trying to protect. The app knows to not show this on a stream, which is pretty intelligent. But they're trying to protect my account balance or my and my account number and stuff like that. But up here, I see it, but it's not showing on stream. I see the account balance. It's the highest it's ever been. So I am wrestling with that psychologically and emotionally. Like, oh, I don't want to ruin the the best I've ever done so far, and versus like, oh, like the flip side to that emotional coin is, okay, I'm so this is the closest I've ever been to passing the evaluation. So let me just like step on the gas even more just to get myself over into the last you know um, last few yards into the end zone. Like, to use a football analogy, like you might tense up and get a little over anxious if you're near the end zone. Um, when you're in the red zone and there's it could go either way, right? It becomes a little bit of a mental shift. You're so close to scoring, but then will that added pressure shift your mindset and make you tighten up, or ideally it makes you focus and stuff, right? So it's like it's different for everybody. But trying not to let that, I don't want to talk about that too much, because talking about it too much will emphasize it, like, because what you focus on expands. But I just wanted to bring that to light, because that is a legitimate part of what is happening for me mentally right now. It is the best I've done on this account. It took forever, it took months to get here on a very part-time basis, but it is the highest it's ever been. And it's and I'm actually following the rules. They're kind of restrictive on this prop firm. They're I'm only trading the one pair, right? So it's like, it's a lot less risky. I never once feared, even with their max drawdown trailing up with the performance, as the performance of the account goes up. I never once feared that I was ever in danger of hitting that, because of how so very conservative I was being on everything in general. So on that note, it's like, it's fine. It's just one of these things that takes forever to pass, and maybe not. It's not a good fit for everybody to trade this slow. But this is something that I'm personally doing for the long haul, so I'm okay with that. I'm okay with this taking months and qualifying, scaling up over the next few years, just to keep that relationship, because I fully expect this prop firm to stick around. My only gripe with it is that I hope that they re-implement TradingView soon, because I don't like this platform. It's a good substitution that's free and everything, but I still want my TradingView back. So hopefully that'll happen soon. Anyway, I think that's really it. That's the only trade I really want to put on right now. Not really in any position to do any kind of divergent stuff. There was an option to maybe take a look at this as a. There's a very, very, very tiny. You have to really squint to see it, but technically it just barely qualifies as bullish divergence. The low here is 33,104, and then the low here is 33,101. It literally made a lower low by 3 points. You can barely even see it. The naked eye can't even detect it, I don't think. 3 points on a 33 on a 5-figure index is nothing. And technically the RSI did make a higher low, the low here being 25 and the low here being 32. Maybe you want to use this one, depends. You kind of have to squint to look at it, but anywhere from 28 to 32, both of them are higher, so this technically qualifies as a bullish divergence. If you were to have gone down a time frame, you probably could see an excuse to get in. The divergence is a little bit more obvious here on the 30-minute, and then the excuse to have gotten in would have been probably this bullish engulfing candle. I don't even know if you can call it that. But maybe this one, this bullish engulfing candle, excuse me, would have been the excuse to get in for the 175 to the 425. I don't think I played it quite that way. I'm pretty sure I just had a set. I just got lucky that happened, and I'm just kind of doing revisionist history, saying that that was the right way to do it, even when I just had the limit order there. And it was, that was the lazy way of trading, which I'm a big fan of being lazy. It just and it worked out, right? I like to play the odds with it being lazy if I have a big enough stop loss to handle it, to handle the movement and play the odds that way. That's how I got this win right here. But the correct, conservative, meticulous way of doing it would have been to spot the divergence. You don't really have good candles on the hourly, but if you zoom in a little bit, you would definitely get a good reason. It would have scared you. This is where the quarter stop loss is better. That, like, most people, if they see this bullish engulfing, if they see that right there, they're like, okay, I want to put my stop right below the candle. I want to enter at the close of this candle and then take it up. Well, that would have stopped you out. This is why I like the stop loss system that we use. Is just a fixed mechanical 75-point stop loss and a fixed mechanical 250-point take profit, and it just works more times than it doesn't. If your percentage is off, then that's your execution of it that's off, not the nature of the edge or the strategy. Same thing down here. This kangaroo tail, I bet if I zoom in even more, I could find an excuse to get. Okay, so if I zoom in even to 15, this is you don't get, this candle isn't that great, but this bullish engulfing, depending on how you define, some people define bullish engulfing to engulf just the body. Some people will define engulfing to engulf the entire candle. But obviously, if you only count the body, that's more aggressive. This doesn't have a big wick or a tail. That's also more aggressive. So if you wanted that, it would have been very aggressive. But you could have taken this from the 250, I suppose, right, on the way up. Seeing this, you could have the buy stop order at the 250. playing it all the way up to the 500. You've been chopping around. Who knows if you're going to get there? But all of this is counter trend, which is why I'm not doing it all that much. The only thing that I have is right now we're not in any trend. This is technically range bound for the time frame that concerns me, but I'm only really interested in hopefully catching a third bounce out of this area. This beautiful inverted hammer candle is holding up this area real nice. I missed both though, so that kind of annoys me. But it held up twice. Hopefully, I'll catch it on the third time. But it wouldn't surprise me if it doesn't and starts making new highs. It kind of depends on how this week shapes up. It is Monday, so we have like a whole week left to go for this market to move.